Hey, so the Fed hiked the rate earlier this week, 2 days back actually, on Wednesday by 25 basis points. And what they hike is the Fed funds rate, meaning it's the rate that banks charge each other if they were borrowing from that. But if you're listening to this and thinking, how does that impact me? So really there are 5 things you need to know about Fed hiking the interest rate. Number one is mortgage rates. So as counterintuitive as it may sound, Fed funds rate does not have any impact on mortgage rates, or has very little impact. In fact, the day the Fed increased the rate, the mortgage rates actually went down a little bit. It's because mortgage rates are long-term rates. They're 15, 20, 30-year rates, and Fed funds rate does not really impact it that much. The second thing that you need to know about is home equity line of credits. So if you have a HELOC, or you're planning to get a HELOC, that's the interest rate that gets directly impacted by Fed's rate. So when the Fed increased the rate by 0.25%, that increased your home equity line of credit rates by 0.25%. You will probably see it in the next billing cycle when you see your mortgage statement. Third thing you need to know about is credit cards rate. And the same goes true for credit cards as it is for HELOCs, which means that your credit cards rate will see an immediate hike of 0.25%. And again, you'll probably see that in the next billing cycle. The fourth thing that you need to know about is probably a benefit that you get from Fed increasing the rate, which is a higher interest rate that you can earn on certificate of deposits. Now, every bank may not do it, but some of the banks will, which is in next 30 days or next few days, you will see that they are offering 0.25%, a higher interest rate on certificate of deposit. So those may be a good savings platform that you can use while the Fed is thinking of increasing the rate. And finally, the fifth thing that you need to know about Fed increasing the rate, that they will increase again. Fed is talking about the fact that they plan to increase the rate 2 times this year and maybe more in 2018. What that means is that you should be looking at whether you're looking at buying or refinancing sooner in the year than later. And even though, as I said, the Fed funds rate may not directly impact mortgage rates, it may have an indirect impact as we go through the year. So those are the 5 things you need to know about Fed hiking the interest rate. You can follow me on Twitter at Shashank Tweets and ask me more questions that I can cover in the future episodes of Mortgage Matters.